2023 is doing better than 2022 in terms of contract activity. It looks like we're in a seller's market. We're not really in a seller's market. It's just that the inventory is falling faster than the contract activity. Both markets are essentially balanced and neutral. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of July 17th to the 23rd. I'm going to get started, as we always do, with the luxury market. Then we're going to move to the Manhattan market and then the Brooklyn market. And then I'm going to sum it all up, give you my thoughts and takeaways. There were 22 contracts signed last week for properties that were priced at $4 million and above. That is 2 fewer than the previous week. Condos outsold co-ops 13-5. There was 1 condop, and there were 3 townhouses in that group. The number 1 contract was a townhouse at 129 East 73rd Street. It was asking $27.5 million. It was listed in May. The 6-story, 22-foot wide house has approximately 12,000 square feet. It was purchased for $8.8 million in 2003, and it was then renovated. It has 7 bedrooms, 9 bathrooms, 8 fireplaces, a small garden, and 3 terraces. The top floor features a basketball court with a skylight that opens onto a rooftop terrace with a hot tub. Sounds like fun. Annual real estate taxes are $186,981. The number 2 contract was apartment 16E at 737 Park Avenue, asking $11,888,000, reduced from $12,950,000 when it was listed at the end of October. The sale represents quite a loss for the seller who bought the apartment from the sponsor, Maclo, for $17 million and change in March of 2014. This condo has a little over 3,800 square feet, includes 4 bedrooms, 4.5 bathrooms, and a private elevator landing. The unit faces 71st Street, and it has a 360 square foot terrace off the master bedroom. Amenities include doorman, fitness room, children's playroom, garden, and storage. Now we're going to take a look at the quick stats for last week. The total weekly asking price sales volume, $162,460,000. Average asking price, $7,384,545. Median asking price, $5,855,000. Average discount from original ask to last asking price, 2%. Average days on market, 662. Okay, that's it for the luxury market. Now we're going to take a look at what happened in Manhattan. Any questions at all, please post those below. Okay, so here's what happened in Manhattan last week. As I've been mentioning in these reports over the last few weeks, we are seeing some seasonal changes across the market, in the luxury market, the Manhattan market, and the Brooklyn market this week is no exception. We are seeing a decline in the inventory that is falling faster than the contract activity. We're going to get into the details about that right now. We're going to take a look at the 1-week look for last week. The supply down almost 18%. 227 properties came on the market last week. The contract signed 194. That's down a little over 12%. The off-market properties rose a little over 22%, 240. So now let's move. We're going to take a look at the 1-month look. The supply, 997 for the month. That's down almost 33%. Contract signed, 864 for the month. That is down almost 18%. Off-market, 856 for coming off market. For the month, that is up a little over 24%. If you take a look at the market pulse, we'll see we are in this kind of so-called seller's market. We're going to get into the details on that. Yeah, we are in technically a seller's market according to this chart. But if you look at this next chart at the liquidity pace, 864, this is this 30-day moving window of contract activity. You'll see that this has fallen. It looks like it might be going up just slightly at the end here, 864. We did see a little rise in the contract activity. But as I said, what's really going on here is that the inventory is falling faster and being absorbed faster than the contract activity is declining. So it looks like we're in a seller's market. We're not really in a seller's market. It's just that the inventory is falling faster than the contract activity. We see the Manhattan supply dips below 7,000 for the first time since April. This is, again, the summer. We'd kind of be expecting to see something along these lines. The pending sales ticked down slightly, and they've likely seen their high for, let's call it, the spring market. The new listings dropped 22% as the supply remains soft. If we take a look at the contract sign came in above 2022 levels. We're seeing a seasonal market that is better than last year's seasonal market. That kind of hit its peak in 2022. We kind of hit our peak in about May. So we're in July. We're still marching along. So 2023 is doing better than 2022 in terms of contract activity. We'll have to see how long this continues. If we take a look at this new chart, which are contracts signed by price range, the leading contract data suggests that the lower end is taking more of the market share. When the rates went up last year, we saw that the lower end of the market really took a hit. The under million, certainly under 2 million, those buyers really pulled back, kind of left the market, quieted down that part of the market. But now we're seeing that the under 2 million market is recently taking more of the market share from the higher price. Well, again, our market data, it lags a bit compared to other markets. It takes longer for us to get our data. But you can see from this chart that the data that is coming in would suggest that those buyers are coming back into the market. And certainly if we're looking at what's happening, actually kind of boots on the ground reporting, we are seeing that. It's interesting to be seeing those buyers coming back into the market, and that's great news, creating more of a balanced market. That's it for Manhattan. We're going to shift over now, take a look at what's going on in Brooklyn, and then I'm going to wrap it all up for you and give you my thoughts and my takeaways. Any questions, please post those below. So in Brooklyn last week, we saw the supply just go up a tiny little bit, about 6.5%. 181 properties came on the market. Contract signed went down about almost 7%. 135 contracts were signed. And the off-market properties rose. 101 properties went off the market, a little over 55%. If we take a look at the 1 month supply, we'll see that 678 for the month in Brooklyn, down 26%, a little bit more than 26%. Contract signed 597, down a little more than 13%. Off market rose almost 35%, 361 properties came off market. Again, as with Manhattan, you get this kind of false sense that according to this market pulse chart, that we are in some kind of seller's market. However, if you look at the liquidity pace chart, you will see at 597 that this 30-day moving window of contracts signed, this is dropping as well. It's just not dropping as fast as the inventory is dropping. So we are not in a seller's market, but there are some subtle differences in terms of what's going on in Manhattan versus what's going on in Brooklyn. And we'll get into the details about that at the end of this report. So stick around for that. The supply in Brooklyn is ticking down, not really surprising. The demand looks like it may have peaked. Look like we got near the 2022 levels. The new listings ticked back down. This is a bit seasonal. It looks like we've kind of had a run with the new listings. Number of contracts down, holding steady, however, suggesting a more resilient market in Brooklyn for 2023 versus 2022, just as with Manhattan. If we take a look at the contracts signed for property types in Brooklyn, we'll see that, interestingly, Brooklyn condos are losing market share as the townhouse demand increases. It's interesting to see that in Brooklyn, the data is suggesting that the buyers are opting for townhouses and co-ops over condos. Are the buyers opting for this because that's where they see the opportunity? Or is it just simply that those are the most compelling properties on the market for this given pool of buyers? Hard to say. Data can be skewed, so we don't really know 100%. But it is interesting to see condos have dominated for so long, and they certainly are dominating in Manhattan. So it's interesting to see this shift in Brooklyn, that co-ops and townhouses are beating out condos in Brooklyn. Okay, that is it for the Brooklyn market. Now I'm going to shift over and I'm going to give you my thoughts and my takeaways for this last week, because as I've mentioned to you, there have been a lot of shifts and changes in these last few weeks as we're moving further into the summer. Remains across the board a pretty balanced and neutral market. I'll explain a little more about why that is, but let's start with a kind of a recap. In the luxury market, there were 22 contracts signed at $4 million and above. Again, that's 2 less than the previous week. Not terrible, not great, but holding steady. There were 13 condos, 5 co-ops, 1 condop, 3 townhouses. Interesting to note, there have been 17 contracts signed for the trophy properties in our market. Those are the properties that are priced at $10 million and above. That is so far for July. The same was true for June, actually. There were 17 trophy properties that went into contract. So we'll have to keep an eye on that. It'll be interesting to see how we finish up in July for the trophy property part of the market. If we take a look now at the Manhattan and the Brooklyn markets, we are seeing the supply dropping in both of those markets. This is to be expected this time of year. The demand has dropped a little bit more in Brooklyn than in Manhattan. So that is a kind of a subtle difference, at least in the last week. Again, both markets are essentially balanced and neutral. Neither, though, are easy markets to be listing into right now. They both have their challenges, and both markets, according to the data, are seeing more action on the lower end of the market, so the under 2 million part of the market. So that might be good news for some sellers. So for those sellers that have been struggling in that price point, this could be very good news for you. Condos and new development have been faring very well in Manhattan. That seems to be what the buyers are seeking out. And in Brooklyn, the co-ops and townhouses seem to be what the buyers are gravitating towards. We'll have to keep an eye on all of this and see if these trends continue. In the meantime, we're going to continue to track this data, and I'm going to continue to be reporting on it so that you have the benefit of all of this information. Here are my takeaways. With sellers, the buyers are obviously still active. So far in July, we've dropped off a little bit, but sellers are really benefiting from the fact that the inventory is dropping, and so try to get your deals done. If you're not getting the activity you want, then adjust your price. You hear me say this, but it's really true. If you've got buyers that are circling or making offers, if you can live with the price that they are offering you, or you can try to squeeze out a little bit more and get your property sold, great, try to get it done. If you cannot live with the offers that you are getting, you cannot sell at that price that you are getting, that this market is holding for you, then maybe you need to take your property off the market, because we don't control the market. When the market speaks, the market speaks. If the market is telling you that your property is worth $10 and you think you should be getting $12 and you don't want to sell for anything less than that, maybe this isn't your market and it's your choice. So if you can wait and you want to wait it out, you have that option. You can take your property off the market and you can decide to put it back on at a later date. But if you do want to sell, you should try to get it done now, because there are plenty of good buyers in this market and there's a lot of cash buyers. Something to also think about. And buyers. There's not a lot of inventory to choose from. There won't be a lot of new inventory to choose from until the fall. So if you see something that's out there that you like, you might as well be making your move on it. If you're looking for a deal, other than the properties that have been on the market for a while, let's say 120 days or more, check out new development, because sponsors are making deals right now. They are getting creative to make their deals. They're going to want to get their prices, but they're offering incentives. So they're not going to advertise that, but there are deals to be made with sponsors. So you might want to check that out. Check out new development. That's it for this week's look at the state of the New York City real estate market. As always, my thanks to Urban Digs and the Olshan Luxury Market Report. The amazing work that they do every week helps me to help you to make great decisions. I will be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.